Hey guys, welcome again. Welcome to another trade recap or monthly recap. And this is gonna be for the month of August. And I'm still your favorite host. I'm Timothy. And I host this FX PhD podcast. And why? Because I'm a PhD student, and I've always had passion for the financial market. So just before I continue again, we can guess the pair I love to trade. I noticed recently that my brokers are making a lot of money off me, but I don't care really. I'm also making money, so it's fine. So those who argue, why someone reached out and said, why don't you go for EU and GU, that you have low spreads, blah 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 blah. I said it's fine if it works for you. I'm not one to my entry system. I would always enter a trade. I had to find a way to get into trades, not like the ICT where you wait for a break of structure, maybe you wait for something to tap and stuff like that. No, if it gets to my zone, I'm looking for something. Once it happens, I'm in. So I don't have issues with spread gaps, blah blah blah. I think probably with respect to my stop loss getting hit, but for a trade, if a trade should get to where my stop loss is, then I was wrong. And I came here to make money and not to be right. So I could be wrong. I will be wrong, and I can be wrong. And the month of August pushed that to me again. So let me say that I can be wrong. Probably, and I give myself, in theory, I used to say, I would allow myself to be wrong for 9 to 10 times. But when it happened, and it stared me in the face, I was like, okay. So, yeah, but I think, and that's why I like the foreign exchange market, because it brings the you in you. I'm sounding deep. It brings out the you in you. That is to say, it exposes, who you are, how your habits, how you treat life, and how you can, if you're really patient. And so this month it tested me way beyond. And so let's hop straight to the chart, and you'd see. I know some of you guys might trade like robots. Kudos to you. But for those of us who trade like humans, and I know I used to brag, so but really I this month reminded me of the fact that I'm still a human, or a human being. So let's go straight to the chart. So as you know, I trade just one pair. I trade one time frame for analysis, one time frame for entries. So in my head is 111, one time frame for analysis, one time frame for entry. What again? I trade just one session. That's the New York session, specific time. And any other thing that's happening in other sessions. Sometimes I'm bored. You would see I have the London session markup. I have the Asian session. I just, I just like candles now. So, but I can't enter a trade. I just come in, I just play, and I'm done. So any strategy I'm building, I try to build it around the time frame. For me, I know for the New York Times about 8:15 to 11, but for me in the state where I'm in is between 7:15 to about 10. If for my Nigerian audience, that should be roughly around, I think it's 2:15 or 1:15 or 2:15 to 5. So imagine, now I'm a student. That's why I had to make this strategy this way. But imagine if this is what I now do for life, and it means I could probably do some other things during the day, have businesses, and then by 2, I could pick it up. So I would leave that for another video. As a trader, I should try to diversify and see other ways where you can make money. So let's hop to our strategy. So the first trade of the month was perfect. Awesome trade. This was the week I was looking at. Nice week. So I'm putting 6 hours time frame and the 5 minutes. Again, analysis 6 hours, 5 minutes, entry. Simple. Make it as simple and keep it simple, stupid. Keep it simple, stupid. Yeah, that's the keys in engineering. And I wanted to make it complex, before, but now it's quite simple. Though I had to teach my strategy somewhere. Now, I don't teach people private classes. I had to just show some friends that, I mean, I can teach you if you want to, but if you want me to teach you, then you have to pay for my time. But for now, I'm not even ready to go into all of those gimmicks. But I had to teach you somewhere, and I discovered, is it this hard? So I think, but to me, it's quite very easy. So I have the zone, and if you need the PDF, I have a PDF where I explain it. If you need the PDF, you could also contact me. You would find me. I'm everywhere. No, not everywhere, but you find me online. You can send me a message or send a comment on this video, and then we'll talk more. And so I had this zone marked out. Again, what are we looking for? So we're looking for the entry, and I did not take this because, I did not take this candle. So you should, for those who understand the strategy, this green candle, I'm supposed to enter here, but I did not take it because, my entry will have been here. Again, all the strategy or all the part of the strategy has been followed. Let's do the first one. It should tap into the zone. Second one, it should take about 33% of the zone. So as at this point, it are taking 33%. So, I mean, it's good. And I was waiting for, so usually I should enter with the fair value gap or at this sell. So I should enter here. But if I entered here, it would be 40 pips. No, it was 43 pips. Yeah, 45 pips. And I wouldn't go in again because to me, I've modified this law and you see this rule. This rule, and you see it in the next trade that I did not take. But for this week is quite long. I want it to come up a bit so it can fill in this week, as the case may be. So I waited and it went in my favor, and I took in a trade from there. I think this 38 pips. I think I still remember. Yep, 38 pips and 1 to 3. Beautiful trade starting the month. I mean, as I used to say, if the first trade of the month is good, there's going to be a high chance, you have a good month. But this month was not as expected. So yeah, the next day there was no trade. I think this is the next day. On the second, on Friday, there was no trade. I was just looking. Again, what's the analogy? You're looking like the lion trying to catch your prey. And so the next day, which was the Monday, next trading day, the Monday, the 5th of August, then the trade came in, and this was the trade. I think it messed up my psychology because I felt bad that I should have probably found a way to get in, but it is what it is. So again, the market tapped in just a bit into it. So obviously you can see it has tapped into the zone. It has not tapped into 33%. Now I don't even have to mark this up. It's more like second nature to me when I'm trying to trade this strategy. I don't know. It just happens to me. Maybe I'll try to mark it up again so that I will get used to it. So what would I be looking for? Usually I'm looking for a fair value gap from this move. And as you can see, there's a fair value here. So my entry was supposed to be there. I did not take this trade. I'm just putting it out there. So again, this was 43 pips. So I could not trade this. Maybe because the previous trade also had a similar thing. So I was expecting the market to pull into the zone before I take it buy. So I did not. But now, looking back and looking at how small this zone is, there's a high probability that I could have just taken this trade. So I now have that subjectivity where I can still, by looking at it, know when to. But again, my highest is 50. I mean, I can't do anything above 50. Anything above 50 for me is too much. So and mind you, this was the second trade of the month, and I was just looking for a 1 to 2. So this will have been just 8C, and I was going to be done for the month, and this will have been a perfect month. But I did not take this trade. What happened? I ran into a roller coaster of losses as expected. So what was the next day? So because I did not take this, let me just turn on the other trades I took. Because I did not take that trade, the next day here, I was trying to get in. There was no trade until on the 8th of August, and that was my first loss. again. So you can see, no, I did not take this one. I did not. I could not have taken this one. So I did not take this trade because of that rule. Now looking back and seeing if I modified the rule, but if I modified the rule, I will not even take this trade at all. So, but with whichever, I did not take this one. But so I'm trying to put it to you that if I modified the rule before now, I would not take this trade. I would have been done for the month. But I did not take this one. Still because of that same issue. It was quite, and the weeks are getting bigger, obviously, because of the crazy moves. So the next one, I think, this was the next trade I took, and this was how the roller coaster began. Yet the zone is marked out. I think it's here. Where is it? Yes, it's somewhere here where my cursor is here. So I marked out that zone. It took out this. Let me just do this. It took out this high. If you can see it, let me delete this so you can see it clearly. Come on. So you can see that there's a high here. It took it out. And when it did that, I planned my entry. Look at the entry. The market tapped me in here and then took me out. And that was it. So that was the first loss. The second loss. Was here. It took me in. It took out. So let's look at it again. Took out liquidity. Now this is a bit subjective, and I should not have taken this trade because usually I wait for, when I have this tap in, I wait for this to be taken out before I come in. What I mean, I felt like a super guy because, so this is the ideology. Once 33% is filled, I don't look out for fair value gap. So again, I should not have gone in on fair value gap. So that is, one of the mistakes I made. Not I made, I felt like, oh, I'm now done. And I like the market. When you feel like you're good, it reminds you, come on, guy. And so this did not go my way. So this will be my second loss. Let's go. So the next, there was no trade on this day. I think I took this trade. I took a trade here and it took me out. Where is it? Oh no, I did not. I think, this was too large because of this zone. It was too large. I did not take that trade. So the second loss, I think the third, where's the third one? Okay, so this was the third loss. Oh yeah, I see now. So this was the third loss. It came into the zone. Let me come so you can see clearly. So this is it here. Came in here. I thought I was, gonna get a buy to continue. The market took me out again. Part of life, and so it took me out here. That was the third loss. All my rules applied. Well, third loss. Then there was no trade yet the next day. So now I've lost all that I brought into the market. I was on zero. So I was thinking, somewhere, because of the fact that, I think I started blaming myself on not having to be a bit subjective. So I found out a new kind of way to modify the strategy to get optimal results. And so what I did was, please pardon me, I took another trade, and so that was the fourth. So I took this trade also, and this was now the fourth consecutive loss. At this point, my psychology was like, oh no, I don't want to use the F word, but my psychology was gone. And and eventually it went my way. Like, that was the most painful of it all, but I mean, that's the market. So it took me out. It tapped into this second zone, but I don't like to take more than one trade a day. So, we could argue, why don't you take two trades? Nah, I take just one trade. I risk very high. I gamble it. Not gamble, but I risk high, like 2%. So at this point, I already had another loss. So gross, I had taken 4 losses. So you'd see that in 4 losses now, but again, something happened. My prop firm, they switched my account to a DX Trader platform, and so it helped me. So I did not take as much losses. I think I still had a bit of 1% in my account. So I just withdrew it, and I traded a $10,000 account. So it's quite just something to, with the current fuel price in Nigeria. So I just took it, and, but my point really is, I could have just looked at that first trade, the second trade, and I would have made it, and that would be all. So, but eventually, now this still played out, and I'm going to explain this strategy in another video. But that was how the month of August worked. That was how it played out. Again, the strategy works. I mean, even 4 consecutive losses is not a bad one for the strategy. It just means I could have closed the strategy at a -1 hour loss for the month, which is still good. But now, so I showed you 2 mistakes I made. The second loss, I could have averted it. The fourth loss, which is the new strategy, I could have also averted it. So I should still have gone home with, that should be 3 minus 2, a 1 RR at the end of the month. Ideal case. And so eventually it shows that the less you trade, the better for you. The best, look out for the best time, and you should build a system that works. And let's go and work on your strategy again. You don't have to adopt this. Whatever strategy you pick would work. It will depend on the pair, it will depend on the time, it will depend on your risk appetite, it will depend on a lot of factors, really. And I hope that we all will smile to the bank and get better at trading and keep at what we're doing. Eventually, profitability is the goal. Till the next video, have a good one. Bye.